Hi guys, here's a quick analysis on the dollar yen. So this weekly time frame shows that price action has been bullish. Price has been rising on most occasions in recent weeks, as you can see. And this is because of two reasons. First, the dollar has been finding support on the back of hawkish talk from Fed members, and the fact that we've had above forecast economic indicators from the US. Including the Fed's favorite inflation measure, the core PCE price index. And also the yen has been weakening across the board, and in response to comments from the incoming governor of the Bank of Japan, who said that most of the existing policy settings will remain in place when he takes over in April. So that's why the dollar yen has been going up, along with all the other yen crosses. Now, let's go to the daily chart first of all. Okay, so previously I was looking at this particular level right here because as you can see on this day, on Friday of 24th of Feb, when we had that core PCE price index, rates broke out to the upside and broke above prior resistance at 135. Let's color that in blue, 135.36, and then in the next few days it stayed above that level but never came down to retest it until yesterday, the 1st of March. So when it came down to this level, it bounced nicely from there, leading to a move to the upside. If I put a line here on the high of Wednesday's range at 136.47, that level now needs to hold on a closing basis to keep the buyers happy. And if that remains the case, then I think there's no reason to expect a reversal just yet. And from here, we could see rates go on to take out liquidity resting above this inverted doji hammer candle that was created on Tuesday at 136.91. So from here, it looks like that level might be taken out next, ahead of the 200-day moving average, which comes in slightly higher at 137.25. So I think we should expect to see more gains than losses in this market because of the macro reasons mentioned and the fact that price action is quite bullish. But it's always important to know where to step back when the market tells you that that the trend has changed. So firstly, what I would look at is this level right here. This would be my invalidation level, if you like, okay, because this is where price staged a massive breakout on Friday of last week. So for as long as we remain above that level, I would be happy to remain a buyer than a seller. But that level looks to be miles away from where we are at the moment. So there are a couple of other levels to watch, including Wednesday's low at 135.25. Ideally, you don't want price to go below this level now because we've already bounced from that key support level the day before. So it would be a less than ideal situation for the bulls if price were to come back all the way down to that level. Also keep an eye on today's earlier low at 136-ish. So those are the key levels I'll be watching to gauge the strength of the dollar yen going forward. So firstly, I don't want price to go back lower on the session because it's already broken out. So if it wants to go higher, you don't want a green candle to turn red. Yeah, so 136.02 is very important in that sense. In fact, you can even move that a little bit higher to the opening price of today's candle at 136.13. So ideally, we'd want the dollar yen from a bullish point of view to stay above that level. If that breaks, then 135.36 is that key support that needs to hold. If it doesn't, and we go below Tuesday's low, then that would put the buyers in a spot of bother, and the bullish idea will become completely invalidated in the event we break 134.05, this level right here, as I mentioned earlier. But all that said, for now, the trend is bullish, so I will favor looking to buy dips into support than sell into strength. Indeed, I actually provided a long trade idea on the back of that 135.40-ish level, that breakout level we saw on Friday. We went long there when the dollar yen was looking quite bearish at one point in the day on Wednesday. But we didn't have to wait for confirmation, because we had already got that confirmation on Friday on the back of this breakout, right? This big bullish engulfing candle. So the idea was to go along there, and the invalidation level was below the low of that Friday's range. And luckily, price has bounced, as I've shown you, and it's already hit our first objective. Whether or not it will get to the extended objective at 137.80 remains to be seen. But for now, we are happy with the way things are shaping up in the dollar yen. If you like this video and how I analyze the markets to look for trade ideas, then make sure to join my private group, details of which can be found on my website at tradingcandles.com.